Have you ever opened your financial reports and thought something looks off, but I'm not sure what? Maybe there's some negative liability accounts, or you have some duplicate sales tax accounts, or your P&L is full of a whole bunch of categories you don't even use. Then you may not be alone. Today we are talking about how to clean up two of the most important reports in bookkeeping: your balance sheet and your profit and loss. Our goal is to make sure that your reports are accurate, useful, and ready to hand off to your accountant when tax time comes around, and give you accurate information so that you can make better financial decisions. Hello, C Squared Collective, and welcome to our series, Spring Clean Your Finances, Planting Seeds for Better Financial Habits. This series is a practical guide in cleaning up your books, planting better financial habits, and preparing your business for smoother taxes next year. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips on the topic at hand. But if you'd like to dive deeper, be sure to check out the rest of the series linked in the description below. As always, if you have any questions, reach out to us in the comments or send us an email at connect@c2accounting.net to schedule one-on-one support. So grab your beverage. Today I have a chai tea latte, and let's get started. Before we jump into cleanup, let's define these reports very quickly. If you've seen some of our other content, or maybe you work with us, this may be a bit of a review. So your balance sheet is a snapshot of what your business owns, what it owes, and what is left over. In simple terms, it shows your assets, liabilities, and equity. Your profit and loss statement, also called a P&L, shows your income and expenses paid over a period of time. This report helps you answer questions like, did I make money? Where did I spend it? Are my categories giving me useful information, like how much you spent on postage? If your chart of accounts is the garden layout, these reports are what actually grew. So today, we are not redoing the garden plan. We are checking out what popped up and pulling weeds where needed. If you do need help reviewing and cleaning out your chart of accounts, and we reference some of the skills from that, we have 2 previous videos on the topic in the series, so check out the description of the series linked below. Let's get started with your balance sheet. One of the first things to watch out is for just anything that looks very strange. A great example is a negative liability account. Liability accounts represent the money your business owes, so if one is negative, it is worth reviewing. Sometimes there may be a reasonable explanation, but often it just means that something was posted incorrectly, a payment was categorized wrong, or a journal entry needs attention. If it's a loan account, it could also mean that that payment was split incorrectly between principal and interest. We also recommend going through your assets, especially long-term assets, once a year. If you've sold any assets or purchased any new ones, you want to make sure that these are listed on your balance sheet correctly. And you want to make sure that your tax accountant knows. Another big cleanup issue is having more than one sales tax payable account. Now, this doesn't always mean that something is broken. There are situations where separate agencies or tax setups make sense, but often multiple sales tax payable accounts show up because something was created twice, or one was set up incorrectly and then another was added later. If your sales tax liability is incorrectly split across different accounts, it becomes much harder to know what you actually owe. This is also a good time to look for accounts that are in the wrong account type entirely. We see this a lot in QuickBooks. You might have an account labeled insurance, which sounds like an insurance expense, as it should be, but somehow it's set up as a bank account. This is typically because when you create an account in QuickBooks, the top one is a bank account because B is first in the alphabet. But this means that it lands on the balance sheet instead of the P&L where it belongs, which throws off both reports. The name may sound fine, but the type is what controls what account it lives on in your reports and where it shows up in your chart of accounts. So you want to make sure that these are correct. That is why one of the best balance sheet cleanup habits is this: read more than just the account names. Check whether each account is the correct account type and detail type. When you are reviewing your balance sheet, ask, does this belong here? Do I really own this asset, or do I really own this money? Do I have a bank or loan statement that supports this balance so everything's reconciled? And if I had to explain this to my accountant or my banker, could I? If the answer is no, that account may need some attention. Now let's move on to the profit and loss statement. The goal of a clean P&L is accuracy and clarity. A P&L should help you understand your business in a very quick overview. If you have too many duplicate accounts, you have random categories, or confusing parent accounts, a report becomes harder to use, even if transactions are technically categorized correctly. Start by simply reviewing a P&L report line by line. Look for anything repetitive, vague, or messy. Maybe you have multiple expense accounts that are basically the same thing, or you have some parent accounts that are not organized well, or you have supply accounts and both a cost of goods or an expense or an account you no longer use. This is where cleaning up parent accounts can make a big difference. If the structure of your parent accounts are messy, the report becomes harder to read. You want similar things grouped logically without overcomplicating the report, such as having all of your auto expenses under an overarching parent auto expenses account, or having all of your office expenses, again, under an overarching office account. You don't want things to be duplicated in here, and you want them separated out how your business actually defines them. The purpose is to make a P&L readable enough that you can actually use it for decision making and not just tax prep. You may also need to merge some accounts if you have any true duplicates, so two categories that are doing the exact same job. You might want to combine them. This helps you simplify your reports and makes trends easier to see. But only merge accounts if there are genuinely duplicates with transactions in both. So something like vehicle expenses and auto expenses, or office supplies and office expenses. If you have transactions in both and want to move to the one that you might use and pull up to categorize more often, you are using this merge account, and it takes the transactions from the one and drops it in the other. But do not merge things just because names are similar. You want your reports to genuinely show a true reflection of what your business's income and expenses are. We go over all 3 points of this: how to use parents' accounts, how to clean up accounts, and how to merge accounts in our chart of accounts videos. So if you need any very specific step-by-step instructions on how to do this and what to look for, how to set up parent and sub accounts, how to merge accounts, etc., make sure to check out those videos in our series. And now let's talk about a category that shows up in a lot of books, but generally doesn't help very much: the miscellaneous category. At C-Squared, we generally do not recommend using a miscellaneous account. The MISC account tends to become the junk drawer of the bookkeeping world. Once transactions go in there, they often stay there. And over time, it makes your P&L very much less useful and harder to interpret. It also causes quite a bit of confusion for your tax accountant. Instead, we recommend going through, making sure that you have categories for things that you might use, such as like postage or other general office expenses. But if you have questions and that's what you're using your miscellaneous account for, we recommend using an Ask My Accountant account. Do this as an other expense and put things in there that you may need to research, or you may need to check out, or you may need to ask your accountant. This label does a couple of helpful things in that regards. It also keeps those unclear items separated from your true operating expenses, which helps preserve integrity of your reports. This does not mean that Ask My Accountant should become a permanent home for things. It is still a very temporary holding place, but it is a much better flag than a miscellaneous account because it reminds you and your accountant that there are some items in here that still need a decision. So if you are cleaning up your P&L, one very smart question to ask is, are there any transactions sitting in categories that don't truly reflect the correct income or expense? And if yes, it's maybe time to move away from those vague labels or use an Ask My Accountant to indicate that it needs a clear follow-up. As you go through both reports, remember these things. You want very clear, concise names and a very organized structure that works for your brain and your business. A clean balance sheet is an accurate representation of what you have and what you owe. A clean P&L is a true representation of your business income and expenses in a way that is accurate and easy to understand. And together, these reports make tax prep, accountant handoff, and business decisions so much smoother. This kind of cleanup may not be flashy, but it is one of the best ways to make your books more reliable and less stressful. And when your reports make sense, you can spend less time guessing and more time making clear business decisions. At Z Squared, we recommend doing this at least once a year, and after tax season's the best time to do it because all of these decisions are fresh in your head. So, if you need help with this, do let us know. This is a service we provide, and we're always happy to help people clean up their books. Thank you so much for watching today. If this helped you, be sure to check out the rest of our Spring Clean Your Finance series with more practical bookkeeping cleanup tips. And if you missed our earlier videos on cleaning up your chart of accounts, those are a very great companion to this one. As always, if you have questions, drop them in the comments section, and please do reach out to us directly at connect@c2accounting.net for one-on-one support. Make sure to like, comment, and subscribe. Check out our other socials, as well as the link to our website in the description below, and we will catch you all in the next video. Don't forget, keep learning so that you can be rooted in wisdom and grow with care.